Welcome back to another episode of the Quantium Cast. I'm your host Ryan Kia, and in this episode we're going to be looking at NMC Health and the events that led to a depreciation in its share price all the way from highs of around £36-40 to lows that were achieved, I believe, on Friday. That's Friday the 8th of February. Those lows were about £6.70 or £6.80 odd per share. Interestingly, at a historical level of support that was there around the £7 level back in 2016, February 2016 to be exact. Now, before we look at the battle, if you will, against the hedge funds, the short sellers versus the activist longs, for those who aren't familiar with the reasons behind the volatility, the crazy volatility of NMC Health's shares, we're going to quickly recap what's been happening from the beginning. Then we can hopefully try and make sense of things together and see what's going to happen next, whether the shares are going to restore to normal levels or continue in a sideways chop or crash into potentially new lows. We'll hopefully be able to decide that shortly. If anybody hears the name Muddy Waters Research, the first name that comes to them is Carson Block. He is known as the world's most feared short seller. He's a guy that started following his father's career as an equity analyst. Carson's father had a reputation for being extremely critical in his analysis. The interesting thing is, Carson decided to get a law degree and go up as a practitioner in that field instead of go through buy-side research or sell-side research and go up the route of an analyst, an associate, as a normal hedge fund route would involve doing. Carson has obviously had a very successful career. If you try and find out about the size of his fund, one source from the FT suggests that it has about $225 million in assets, and obviously with the publicity, you can imagine a lot of deals have been closing and the fund's popularity has been increasing, leading to a rise in assets under management. Probably in the future, who knows? But they mean business. They can obviously open relatively large short positions. They made a lot of money on Burford. We don't know how much, but we can see that the shares crashed 60% on the day of which they mentioned they had a short position in Burford Capital. If you're interested in learning more about Carson Block and the way he thinks, there's a good documentary that may still be around on Netflix. It's called The China Hustle, and it talks about some of his previous successes in calling out frauds or more so accounting bubbles on certain companies, and that documentary specifically focuses on Chinese companies. So it seems that his practices are somewhat universal. US companies we've seen UK companies, obviously Burford. NMC is the one we're going to be talking about shortly, which is a crazy story, and it hasn't even really started yet. There's so much more to come. The free report from the quote-unquote independent party. You've got a lot of stuff coming up. But anyways, if you're interested in learning more about Carson, feel free to check out the China Hustle. I don't have a link to it, but it's on Netflix. If you use Netflix, it will be there. So let's take our minds back to mid-December 2019. Now, on this day, Muddy Waters decided to release a super long report, otherwise known as a dossier to the professional. This report was deep. I mean, if you've ever seen sell-side research, compare some normal sell-side research to Muddy Waters sell-side research, and you'd see how crazy this is. They had serious doubts about the company's financial statements. They doubted asset values, the cash balance, reported profits, and reported debt values. One interesting thing that I should probably bring up now is the cost of some of their acquisitions. I believe they quoted something like $7,700 per square meter, and that exceeded an expectation of $3,500 to $4,000. For those who wonder how Muddy Waters got to these estimates of how NMC may have paid double the average square meter cost, they looked at a parking garage from competitor hospitals and also areas that could be used as suitable like-for-like assessments. It's not that difficult to find data of purchases of different areas of land, property, whatever, and they showed that NMC definitely overpaid. Muddy Waters also pointed out that NMC has potentially understated its debt by approximately $320 million, which is obviously a lot, as of the full year 2018. This is because they failed to report leases associated with the acquisition of Aspen Healthcare as finance leases. And it's interesting how by playing the books a little bit, a large company like NMC is able to deliver continuously and see its shares rise all the way from a couple pounds in £7, let's just say, in 2016, to highs of around £30-40 and deliver great returns for shareholders. But the problem is, these returns were potentially unsustainable, as suggested by Muddy Waters Research. As a result of all these findings, shares fall to about £17 per share. This obviously forced NMC, as a publicly listed company, to come out and respond to the recent share price movement. So they released an RNS on the 18th of December 2019, and it said that they will immediately review the assertions and accusations made in the report. And they mentioned that they are baseless without obviously looking at them, which is interesting. They said they'll respond in detail in due course. They said that the company has a strong track record of significant, open and increasingly detailed disclosure to the market. So they're trying to cover their backs at this moment, trying to say that nothing's going wrong. They reaffirm trading and operational guidance for both 2019 and 2020, which is super difficult to do. How can you look ahead and say everything's going to be fine? They also talk and say that they are going to be initiating a buyback of up to $200 million. And that was a program that had been approved by NMC shareholders on the 5th of December. I remember looking from the outside and being so confused because Carson Block of Muddy Waters and his team decided to accuse NMC of potential liquidity issues. And NMC says we're going to buy back 200 million of our shares. So to fight risks of illiquidity, we're going to waste our cash to boost share prices in the short run and not be able to reinvest in other projects. Instead, pay large debt servicing payments, taking out additional debt to fund any planned acquisitions or capital expenditure, whatever, even investments. Because they've spent 200 million buying back their shares. They're buying back their shares, in this case, they were buying them around 15, 16, 17 pounds, all the way down. And I think most of that had been completed. And what are the shares now? Even after being up 30-something% today, the shares are trading at around £9.26, which is super crazy. It's almost as if the company made a loss buying back its own shares, which is super weird. But then again, Apple did that, and it worked out for Apple around the high hundreds of dollars, because now Apple shares are trading around $300 per share. Now, if you're wondering what happened after NMC released this response, the shares actually fell further, from around the £17 level to £15 per share. They also released another RNS the next day that had refuted the entire thing. They also released more details alongside this about their share buyback program. If we look at NMC's response to Muddy Waters' claims and accusations, we can see that it is quite insufficient, and the market thought exactly that. They failed to account for the debt issue that was there, the potential understatement of around 320 million of debt. If we look, we can see that NMC says NMC has been in high growth delivery phase, which is backed by the group's long-term debt facilities, and some other corporate nonsense that effectively is the same as someone asking me why I've been putting on more weight recently, and I just say I'm bulking, but actually I just haven't been going to the gym or exercising, and I've been eating more. It wouldn't be fair for me to say that I'm just preparing for the next phase of growth. Moving on, about a month later, NMC Health releases an RNS on the 17th of January 2020, saying that they have formed an independent review committee with a firm called Free Group International Solutions LLC, which had Louis Freeh, the former federal judge and FBI director, decide to begin a report into short seller Muddy Waters' accusations and some of the activities that may have taken place. It's interesting how these rash responses are somewhat similar to the claims that came out from Burford Capital, the quote-unquote litigators, who decided to say that Muddy Waters may have been manipulating orders and some of the price. They were placing stops below a certain level or short orders below a certain level and decided to cancel them quickly, affecting the price and crashing the shares to effectively do what happened on the days of their disclosures and attack the shares frequently. Well, these claims haven't seemed to make any leeway in the legal justice system, but the Free Group investigation is continuously proceeding, as has been reported by NMC. And it's obvious that when NMC hires Free Group are probably going to come back, assuming there's some kind of corporate corruption or just a business deal going on, and Free Group's going to say to NMC that there's nothing wrong, Muddy Waters are just making false claims, shares go up, and then in the long run people realize that there may actually be fundamental problems, assuming that there are. And that's just how it tends to work these days, which is upsetting to see. But that's that. There haven't been responses from NMC with regards to the Free Group report, the investigation, the independent review committee. These are supposedly going to be released in advance of the company's full year earnings result that will be released around March, I think the 1st of March maybe. So it seems that we'll probably see a response from Free towards the end of this month, which is February. It's the 10th of February today, so that could be around 20 odd days from now. We don't know, but you'd probably expect there to be some kind of positive response. And the downside in NMC's model, assuming you feel that there are some problems in the company, some systemic problems in terms of liquidity issues that can threaten the company's future and potential survival, then you may look to short post a spike in that situation. Every time there's good news with NMC, if we've just seen today, there's been rumors of NMC being taken over. That is a potential situation or factor that we should say could be considered if you're a bull. That's probably the most up-to-date news, because today there was a release of a statement regarding a possible offer, and NMC Health did actually confirm that they had received highly preliminary approaches from KKR and KGI, extremely long names, Kohlberg, Kravis, Robertson Co., LP, and GK Investment Holdings Group, SA. They were separate offers regarding possible offers for the company, but they did stress that no proposal had been made. And as I'm sure many of us have experienced in past investments, when this kind of RNS is released, it doesn't mean an offer is guaranteed. It just means that there may be discussions taking place in the future. So take what you will from that. I guess the market decided to send the shares up over 32%, all the way from lows of approximately £7 per share to today's close of £9.26, accounting for the UT aftermarket trade. There's also been another issue that regards shareholding of directors. Apparently, some of the top shareholders were looking to sell approximately 200 million worth, similar to the buyback level, of the company's shares in terms of dollars. And that sent the shares all the way down to £12. The shares crashed around 20%, and they fell all the way down to £7 afterwards, when people were assuming that the sale of these shares that had been used to quote-unquote pay personal debts of those top shareholders were actually being flooded into the market, and the buyback had supposedly stopped momentarily. That was causing a problem for a lot of investors in the company. They decided to sell out and see what happened with the shares. The shares crashed and made lows, 2016 lows, February 2016 lows in fact. And Muddy Waters tweeted out saying that it's possible that these shareholders are actually selling as well, and the disclosures may have some problems. A couple of days afterwards, we see, which leads us to today, alongside the takeover potential news that we'd say is potentially false, as you always see it when big company shares crash. People think takeover, that's the way to give them a dead cat bounce, who knows? But they released a statement showing that Dr. Bhavaguthu Ragam Shetty, Mr. Bian Shetty, the top guy, the founder of NMC Health, and his family, some of his associated family holdings in the shares of the company, are actually under investigation, or they are investigating themselves as a firm, what the actual disclosure of their shareholdings is. That's so confusing. There are a couple of points that were made here, and also mentioned that the board had asked B.R. Shetty, the founder of the company, and a couple of other top guys to absent themselves from further board discussions. It seems that there's an inner conflict within the business, which is worrying. I had no position today, but when I saw the Takeover bid, I thought, wow, that's amazing. They actually said, we've been approached by these big dogs. But then I see this and I think, Carson called this before it happened. Muddy Waters said that they doubt the top shareholders were keeping their positions and rather trying to liquidate immediately, assuming that they know what's going on. And this is really worrying to see. In my opinion, I would steer clear of the shares at the moment, awaiting further clarification, pending a potential response. The free report may likely come back positive. If you're looking to trade, that may be something you look to, getting in just before that kind of area, knowing that the results are going to be good anyways, making a quick buck, getting out. But thinking from an external view, if I were a long-term investor, I would want to know how much shares this founder of the company has, what his disclosure is. Has he been selling them through a cheeky way to raise funds or whatever? Have we been told the whole story? We don't know. In terms of earnings multiples, though, NMC is actually cheap relative to its peers. Only now, after such a battering, it was traditionally an expensive company in terms of price-to-earnings ratios. I remember looking back at them around a year ago and seeing their shares trading at a P of something like 20 times earnings. But health companies as a whole are generally expensive in terms of earnings multiples because they have high assets and relatively safe margins. The problem is the margins aren't super high. NMC is actually claiming to have super high margins relative to their peers. The Muddy Waters report actually did a comparison, and that's what's also worrying, because if you're a value investor, one that wants to make money on companies that are somewhat undervalued, you wouldn't really go traditionally to the highest in the sector in terms of price-to-earnings ratios, like an earnings multiple. You would rather try and get something that's relatively cheap but not the cheapest of the batch and try and see if you can capitalize on future growth. So what now? Await the free report, await the end of year results, await clarification about director shareholdings. For traders, however, it would be important to pay attention to these two zones I'm going to look at right now, and those zones include cluster areas of support at around 790 odd pence per share to something like 803. So that kind of area is a nice area if you're bullish in the long run or even bullish in the short term. That's an area you like to buy on a bounce. That's kind of where we're looking at. If you're already long, considering the price closed at around £9.26, there is upside probably in this current range all the way up until around £11.80. So in a super bullish scenario, that's probably where we'd look to. In the worst case scenario, say the shares go back to 700 pence per share and make new lows below 670, then we'd probably look, using a bit of fib, to around £5 per share, and a safe place would be to say £4.73, that kind of area. So it's a relatively weighted risk reward. If you were to go long now, you probably got around 200-250 points of upside, but if you were to go short, you've probably got around 340, so it's a little bit more, but it depends. Right now, the overall sentiment is bearish, especially after this shareholding RNS. Nevertheless, thank you for listening to this episode of the Quantium Cast. We've been away for a while, pending development of our site, which is currently being teased if you've clicked this link right now. And we're also writing a book that will hopefully come out in 3 or 4 or so months once everything's sorted, and we'll be releasing more educational content on our site. If anybody's interested in the book that's coming out, it will be our guide to technical analysis. The title is yet to be confirmed though. I've been your host, Ryan Kia. Thank you so much for listening. Regardless of whether you're short or long NMC, the inevitable goal that we all share in common is to try and create value. So the best thing to do in these times is to try and swing, make use of the highs and the lows, whether you're going long or short. In the next installment, we'll probably be looking at the battle between Krupa Global Holdings, a hedge fund that is trying to take an activist long position on NMC, and Muddy Waters Capital, who remain short until obviously a disclosure has been made, and they still see many red flags in the performance of NMC in the future. It's all to play for. Until next time.